There really are three main different types of leases that are available to you. It is important for you to understand what type of lease you are in. We'll start with a triple net lease. I would say this is probably the most common that you're going to run into. That means that there is a base rent number which goes directly to the landlord. That number is the one that's going to have the escalations based off of it. A lot of times that number is the one that you focus on most. But many times there's actually an added expense. Those are called your triple nets. Those are three things: taxes, insurance, and common area maintenance. So that is an added expense on top of it. You might have a $25 base rent with $4.50 in triple nets. It's imperative for you to know what those triple net costs are, because you need to consider the gross lease rate, is what we call it, to make sure that you are able to afford this lease space. On the other side of the spectrum, we have a full service gross lease. That means that everything is included within that number. Not just the triple net costs that we just discussed, but also utilities, oftentimes even janitorial. Many things are included in that full service gross lease. But the second most common would be somewhere in the middle. We call that a modified gross lease. That means that the base lease rate payment includes some of those triple net expenses, potentially some of those utilities, but you want to make sure that you know what is not included in that, so that you are aware of what the gross lease rate is for you. In all three of these lease types, you're going to have what you call an operating expense reconciliation. That means that at the end of the year, the landlord is going to add up all of their expenses, and they're going to say, this is what you paid, and this is what it cost. In a triple net lease, if whatever that difference is going to be applied to you. Maybe you owe $200 because it was different the year before. Maybe the expenses went down a little bit. They'll give that to you as a credit on your next rent. In both a full service and a modified gross lease, you're going to have what you call an expense stop or a base year. That means at the end of the year, they're going to add it up, and if it costs more, they're going to send you a bill for the difference. If it costs less, that landlord gets to keep the difference. But it's important for you to know that at the end of the year, you might have a cost that's coming up that you were maybe not aware of. And so make sure that you understand when that's going to happen, and make sure that you reserve a little bit of funds so that if there is a big expense difference, most leases, that goes directly back through as a pass-through expense. Another thing to consider with a lease is, what are you responsible for? If your HVAC breaks, is that your cost or is it the landlord's? Sometimes there's a bit of a variance. Maybe you cover up to $500 or $1,500 and the landlord takes care of a higher expense, but you need to know what is on you and what is on the landlord, so that you can make sure that you have a reserve if you have concern that maybe your HVAC is going to break.